Hey everybody, today we're going to talk about why stock prices fluctuate. In order to understand why stock prices go up and down, you have to understand what is called the law of supply and demand. Part of this law says that if supply remains the same and demand goes up, then prices will go up as buyers compete with each other and literally outbid one another to buy the product or service in question, in this case, a stock. On the other hand, if supply remains fixed and demand goes down, prices will go down because sellers will be forced into a situation where they have to lower their selling price in order to be able to get rid of whatever they're trying to sell. In this case, again, stocks. Demand pushes prices up when it's high. When demand is low, that pushes prices down. In the cases of stocks, how many shares outstanding any given company has stays relatively constant over time. Some things can affect that. We're not going to get into it here and now, but the number of shares outstanding remains fixed. That's the supply end of the equation. The demand end of the equation just comes down to market participants, the buyers and sellers who are trading shares of stock. Apple has been very popular lately. The stock price has gone up considerably in the past few years. That's because people like Apple products. The company is very profitable. They've got good margins. They've got big market share. So people are constantly willing to pay more and more for each share of Apple stock because they believe that Apple will continue to be profitable in the future. However, in the last few months, the market in general has been going down. People just don't have much of an appetite for stocks right now. They're worried about big economic factors and crashes that might happen, or the trade war with China. You might have heard of some of these things. That has pushed demand for stocks down because people are concerned about the economy. So sellers have to lower their selling price in order to be able to get rid of the shares that they're trying to sell. So that's what it comes down to. If demand is high, stock prices will go up. If demand is low, stock prices will go down. There's a lot more factors that influence decisions, but in general, that is the meat and potatoes of the stock market and what drives prices. Hopefully that answers some questions that you may have had, or hopefully it brings up some questions that you didn't know you had. If you're interested in learning more, please reach out to me. I'll be publishing more videos. I'm Court Mackey. I'm a financial coach. It is my hope to help you get to the point where you have the money that you want to live the lifestyle that you want. Stay tuned. Catch you later. Like and subscribe.